Good morning, everyone. Welcome to our Friday morning trading session, the day after Thanksgiving. I'm not really sure why. I don't remember the last time I've traded a Friday after Thanksgiving. Everybody else is out at the mall already. Just joking, sort of. But we'll see how the market behaves this morning. I honestly don't anticipate too much of a move, but we'll hang with it for a little while anyways. Of course, if you're a non-US resident and you're not familiar with the Thanksgiving celebration in the United States, it's a huge holiday. Probably because the Americans don't take quite as many holidays as we Canadians tend to. All right, so the market just opened up and it looks like, well, here, let's take a look at the Eagle. There might be a little bit of an opening gap here. Thursday's session was, yes, the market did trade electronically on Thursday. It was a rather odd session right through here. So it rallied up a little bit. Nice rule of three signal, actually, now that I look at it. This one's practically textbook. The rule of three occurs when we get three signals against the dominant band. And you can see here the market went up, gave us a nice test of the extreme, which is a very important part of the rule of three. And then we get 1, 2, 3 signals against the band, and down she goes. But if we take a look at the market relative to where it left off Wednesday, we're more or less in that same neighborhood. Not too much has changed at the moment. Gold prices just took a little bit of a hop higher. Hold on a second, I'll bring over the gold chart. Here's gold on the hawk. And a nice first micro macro cross signal right there. Here's also the green bar sell, which turned out to be our test of the extreme. But the market giving us a nice reversal there on that first micro macro cross. No problem whatsoever hitting the profit target. And you can see that there was some exceptional follow through there. So gold getting a little shot of bullishness. I'm going to try to give the market a few moments here to settle in. Speaking of first micro macro cross signals, we're getting one here on the hawk right there. So ideally you want to cover the trade as far away as you can. Alternatively, you can use the macro line, and it looks like we can, oops, the market just ticked a little bit on me there. I was going to say, it looks like we can still enter at the same parameter. The problem, of course, is that it's still very early, besides being very early, and besides being the Friday after Thanksgiving. There's a possibility that this may turn into a macro pullback or a 4-arrow consolidation. Because it is, the day after the holiday weekend and volume is probably light. Hold on a second here. I'm going to try to get some volume figures to compare. I was going to say, because volume is probably a little bit light this morning, the market may be prone to a little extra choppiness. And you know what? We're going to hit the break-even trigger here in a moment. I'm going to throw that into a runner. And just take a chance on this one. See if it's not going to tail off down here, get to Wednesday's lows. It's always the problem when you try to play a runner, right? Do you take the profit? Do you try to let it run out? If we can ride out this swing, there is a chance that we will see the market fall to this level right here, back down to 46.72, give or take. You can see right now, according to our support and resistance suite, we're sitting right on a support zone. And now that we've broken that, and we've broken the primary support, 46.72 does seem like a likely target. Let's see how that plays out. In fact, I'll put a profit-taking target. Oh, maybe I'll take a profit right on this low. And that will bank some profit should the market continue lower from here. And then I'll bank the rest here at 46.72. Oh, come on. Actually, you know, this would be a good spot to add to my position also, because a breakdown through here should see some momentum accompany a move lower. Come on. Get down there. No, see, so it's trying to turn into a macro pullback. Retesting the breakout, right? So when we break out of a trading zone like this, we look for this is the test of the breakout. Here comes the retest. And then we would look for the resumption of the breakout, the market moving in the direction of the breakout. Typically, we can expect two legs in the direction of the breakout. Legs referring to the, you know, this portion here. This would be the leg of one move. Then we had a little retracement. Then there's another leg, just like here. This would be referred to as a leg. I think it's fairly self-explanatory. Okay, so now we're getting a very odd type range building here. The market did try to head lower. Now it's not necessarily wanting to go lower again. We're into yellow bars at the hawk. Yeah, just kind of getting a mishmash of signals here at the moment. So here come the sellers again, pressing at those lows. That was a very, very strong zone for the sellers before, pardon me, for the buyers before. And maybe I'll take a look here at the Raptor, and maybe we'll have a runner in play here also. But we can see we generated a signal here, but because these lows are so strong, if you're going to enter here, you're probably going to want to enter below those lows. Remember, the hash mark is only a suggested entry. If you see a whole lot of support on an area, don't feel like you have to take the signal right on the hash mark. So I was just taking a look at something here on the Raptor. Okay, so the Raptor actually coming in now with a buy signal. Now this could be interesting. Same idea. What I'm going to do is we've essentially got this market bracketed now between, it's an OCO order really. We know there's resistance on this high at around 46.84, and we know there's support on the low at 46.76. Prices seem very reluctant to head below here, even though the general trend today does seem to be down. Of course, that does not mean we can't see a short-term move higher. But with trend, we would be looking for the market to sell off today. Note the volume on these bars at these turning points. That's significant. All right, so here they come again. Here come the sellers. Let's see how the market responds now as we get back to this support zone. My biggest fear here is that you just get that one tick trend where the market just moves in your direction for a single tick. Although I have a feeling, given all the buying pressure that's been going on here, a breakout could have some decent momentum to it. the longer they take to make the breakout outside of this channel, the less likely the breakout will stick also. All right, so let's see what they do with this now. Come on, get down there. Oh, look at that. The buyers did support the market one more time. Now it's up to the sellers to come back in. If the sellers regain the market at this point, then we're pretty safe bet we're going to see the market head lower. Come on. It's not that much further. You can do it. There we go. So our target would have been right here at 46.72. But because I've only got a single contract on here, I'm trying to run it out. And as we know, there is some support around that 46.72 area, according to our support and resistance suite. Oh, come on. Just a little more. There you go. You know you want to. Get down there. So the lows from the other day right down here, giving prices a little bit of grief. I'm doing my best to be patient with this trade, but I tell you, the longer it takes to head lower from here, the more inclined I am just to get those stops to a break-even position. right, last chance. I'm going to snap it down to break even. If they fail at this point, then I don't want any part of it. All right, well, they tapped me at the break even. We'll see here in a moment whether or not that was a good decision or not. Something to note in your trading journal. Like I said, I honestly don't remember the last time I traded a Friday after Thanksgiving. Looks like while that was unfolding, we did get a couple decent signals here on the Hawk. We had a 4-arrow consolidation. So 1, 2, 3, 4 arrow came right there. You could have also considered this a first micro-macro cross signal. Even though the lines did not cross, notice everything went out of sync. Your filter, your trend lines, your bar color, and then everything came back into sync. That was followed by a green bar sell and another first micro macro cross. So you had a couple opportunities to get short here. And from a scalping point of view, it would have been a profitable trade. In fact, I shouldn't have got too cute with the market this morning. I should have just taken my profit when it gave it to me. And then you come back with another signal here. Take your profit. I don't know why I was thinking that the market would spin lower today. I guess sometimes if there's not a whole lot of market participation, prices do have a tendency to fall. It's easier for a market to decline than it is to rally. But obvious hesitation to the downside. You know, every time we got back to this 46.76 area, the buyers started to dig in, trading got more difficult, momentum waned. So have we put in a bottom? Well, maybe short term. Again, you can see the width of some of these candles here. Candles always getting wider at turning points because, excuse me, because of course that's where all the trading is taking place, where the buyers and sellers are at odds with each other. And that's where you're having a difference of opinion. And that's where things always get a little bit more interesting. So some fairly neutral activity at the moment. Again, nothing too surprising given what's been going on. snooping around here trying to find something interesting. But not not too much going on at the moment. Gold, like I said, made that little spike higher to start. And the NASDAQ keeps digging in here, although I admit I'm a little reluctant to be on the buy side. So a macro pullback signal here, but like I said, the momentum has been so weak to the downside. If you're going to try it, it is a quality signal, but I would dial back the risk amount, or perhaps just make sure I get a onesie going there. You don't want to overexpose yourself. We do have the warning dot, triangle hash mark right there. You're going to want to cover, as high as you can. This is not a real good trade to follow me in on, folks. It's, I'm showing it to you because there's nothing else going on. Looks like we're going to get engaged here in the moment. But like I said, the market definitely seems to be struggling somewhat. Let's shoot a trend line across here. Well, it is bouncing off the trend line, so that's encouraging. And go ahead, take that target out. Get in there. Okay, so had I scalped all three signals this morning, I'd actually be showing a fairly decent profit for a day where the market's not really doing a whole heck of a lot. All in, all out. People always ask, is it better to let it run or just to go all in, all out? Well, I've always tried to be an all in, all out type trader. Oh, now we're getting a little bit of follow through. Oops. So you see, that's how you make the market go lower. You take your runner out of play. Ain't that always the way? Oh well. It's uh it's the kind of thing that really doesn't bother me. Having hit my profit objective, that's really all that I'm after. If the market continues lower, okay, it continues lower. You always try to gauge momentum, but it's a difficult thing to do, no doubt. You can see that we also had a trend change signal here in the Falcon, which looked like it had some reasonable amount of follow through. So the trend change signal occurred right here. Our trend line waffled a little bit, went from green back to red. Here's the down portion. Here's the up. Here's the down. Generated a signal. I do believe that hit its profit objective also. Yes, it did. All right, so that was a pretty good effort on the part of the sellers. Was that the last ditch effort on the part of the sellers? I would think, where's the next support line? 46.61, 46.62. I would think we would try to sneak to there, and then we might see the market consolidate a little bit and maybe even reverse. All right, so this macro pullback has turned into a yellow bars, which is suggestive of support. Gold very flat, crude oil very flat. I do think, however, we're going to see a rally coming here in the NQ. We do have a soft edge buy here already on the Raptor. The problem is we haven't had a real big test of the extreme. Tiny, tiny little test right here. We'll give them a few minutes. We might get a better test of the extreme. And I might even consider a buy out of that. Oh, sorry, Kai. There is sound. There's just nothing going on. Um, Michael, ask a question. Hooray! And sorry, Michael, I see you asked this a little while ago. I didn't even notice it come up in the chat window. Michael says, I've got a house full of visitors who wanted to try a trade. In Sim, they racked up a $2,000 loss and wanted to know what they did wrong. I think my family understands how hard it is to trade now. It is difficult to trade, especially, when we're lacking volume and momentum on a day like today. Um, the easiest way to make money trading is simply to concentrate on your high probability signals, like this first micro macro cross that we have brewing here in the Hawk, and take your profit when you have it. Like I said, the earlier signals that we looked at, the first micro macro cross right here, the one I tried to run out, but had I just taken profit on it, it would have worked out pretty well. So you can see it fell off sharply there. Then that came back a little while later with another first micro macro cross and or green bar sell, either or. That one also had decent follow through, and that was followed by another first micro macro cross signal. So you could have actually had a pretty decent morning if you had just concentrated on those. Now we're getting a first micro macro cross higher. The problem I'm having though is we haven't really had a decent test of the extreme. Although I fully anticipate that the market's going to bounce around a little bit here. All right, so here we're getting our test of the extreme now. The market heading a little bit lower. I can tighten my first micro macro cross, reset it, because if prices rally from here, it's going to be more likely that I'm at least going to be able to reach my profit objective. And now it's turning into a macro pullback signal, so I can adjust it again. This high here is the significant one, though, for prices to rally, I mean. All right, there they go. First micro, or the macro pullback slash first micro macro cross. We have had a little bit of a test of the extreme here. And we'll see whether this little move lower was enough to take up the rest of the selling activity. Come on, get up there. Here we go. Okay, almost to the break even. Ah, darn it. I can't believe they just came up short of the break-even trigger. All right, I'm going to roll my stops right to here. Oh, it's just going to be a brutal day trading. In fact, I think we're going to button up the room here shortly. I do think the market is going to try to head a little bit higher, but there's just no momentum today. There's nobody trading. Everybody is at the mall. It's one of the few holidays in the US where the Americans can justify 4 days off work, and you can see the result of that. So we'll hang with the trade for a little bit longer, but I think we're going to be closing up the room here in just a little while. Okay, good question here from Kai. Kai asks, how can we decide if it's a high probability signal? Is such a one even when there is no test of the extreme? For example, we have our first micro macro cross and it's a new swing low. Yes, okay. So I think what the question is what if we don't have the structure of the trade? So for instance, this is a first micro macro cross signal. There's a couple of things you need to consider when you're taking a trade. First off, you need to consider the overall context of the market for that day. So for instance, I normally have a rule. It's kind of a soft rule, but I try to adhere to it anyhow. If the market is paying off in one direction I'll stay with that direction for the day. Unless I have a very good reason for going the other way, I will continue to buy or sell accordingly. So today, the market was actually paying off to the short side. Here's actually that first micro macro cross signal that we were looking at shortly out of the open. And we have the same kind of situation here where we don't really have a proper structure on a trade. We don't really have that test to the extreme, yet we know it's a high probability signal. So how do we handle it? Well, the way that we handle it is we try to give the trade as much room as possible. Ideally, we cover above the high, because this is the definite, I am definitely wrong about this trade place, right? If the market brings you in here and then reverses and takes out the high, you know without a doubt that you're wrong. Now, everybody always looks at this and says, well, I don't want to lose that much money. Remember, your risk amount is determined by this right here, not by how far you place your stops away. And chances are pretty good that if the market did engage your order here, and it did trend a little bit higher somewhere through here, you're going to get one more chance to roll your stop. So while your initial stop is 200 and change, somewhere through here, you're going to have an opportunity to roll your stop, effectively making it about half. It's the very rare occasion where the market just keeps going higher and higher and higher and eventually stops you out for the whole amount. Okay, so thing number one is try to give your trade as much elbow room as possible if you don't have any proper structure yet. And then once you do have a trade, see this one worked out, hit our profit objective. Okay, now I'm starting to favor the bears. I'm starting to think, okay, we've had one payoff to the short side. Oops, sorry. We've had one payoff to the short side, and then a little while later, we get another signal right here with a green bar sell. Or if you determine this to be a first micro macro cross, I wouldn't argue with you. We have a little bit more structure in that prices have done a breakout through this support area here. They've come down. That's our test. Came back, gave us a good retest. But now, of course, we have a little bit of conflicting information because it's almost starting to look as though support is coming in. But it's the same thing. You have to trust the probability of the signal. So first micro macro cross signal, where are you going to cover it? Well, remember, your risk doesn't change, so there's no point in covering it right here. You've got a swing high. I would say that's the minimum here, or you can go above the retest zone, which would be a little stronger yet, and then you can see the market came up and went right back down again, hit your profit objective, and came back with yet another first micro macro cross signal. So what you should do in order to gain confidence in these tools, if you have the profit finder, run through the profit finder, and well, even if you don't have the profit finder, grab your chart, roll back through your chart, just stop at random and start analyzing your high probability trades like your first micro macro cross, and watch what happens. Okay, if it pays off to the short side, how many more signals to the short side do you get that work out? Well, you can see the trend was very influential here. First micro macro cross, green bar sell. Yes, you took a little heat, but look, it continued to follow through. So this is a very good exercise, and I can tell you, day in and day out that it's a high probability signal and this is what you should do. But until you do it for yourself and you prove it to yourself, that's really when it's going to start to sink in. So here we come with the first micro macro cross higher now. And yes, it's still a high probability signal, but if you look at it in the context of the day, this is essentially going to be a counter trend trade for us. Right? And counter trend trades, by their definition, are going to be riskier trades to try to get a handle on. Here too, we don't really have any structure, so I have to try to cover the trade very, very deep. So the signal fades, it develops into a macro pullback signal, so I chose to take that one. Again, with the realization that it's counter trend, but I was hoping it would at least hit my break-even trigger. It did not, so that was enough for me to roll the stops in and take a small loss. If it does come back now and try to produce another buy signal, I will probably try to buy it because we've got a little bit more structure here now. You know, this is looking more like a proper test of the extreme. We may see the market rally here and try to test maybe the highs of the morning. But this whole, see where we're at again, 46.76. Remember how much trouble the market had breaking that area before? So it looks like 46.80 down to 46.64 is a real problem spot for the NQ right now. Well, I shouldn't say problem spot, but that the NQ is very content to trade inside that range. But the trend today is down. So any buying attempts, you want to be a little extra careful on. So I hope that makes sense. Because there's very little going on at the moment, I think we're going to button up the room a little bit early. If you do have a question, please type and just let me know that you're typing a question. Otherwise, oh, okay, Kai's typing. Absolutely. So Kai's asking, can you tell us how to use the Day Ranger? Day Ranger is this tool up here. This is one of these tools that is, it's a system add-on. It will work in any chart style, not necessarily DTS specific. The Day Ranger gives you the average ranges for the last 30, 10, and 5 days. So you can get an idea whether the market is expanding or contracting. So right now, looking at it, the 30-day average is about 200 ticks, 10-day average 196, the 5-day average only 145. So that tells me that the market is contracting a little bit, but that's probably due in large part to the holiday this week. Today's range is only 116 ticks. Yesterday's range was 122. So there's a couple of ways that you can use this. You can say, okay, the market is contracting somewhat, therefore I can expect smaller moves. So maybe I'm going to go all in, all out on more of my trades until it begins to look like the market starts expanding again. The other thing you can do is you can take the average ranges and you can use them as profit targets and stop losses. So for instance, and we're just going to do this for easy math, let's say we're going to settle that the average range is 150 ticks. All right, we're just going to ballpark this. It looks like the market's contracting from 200 to about 145. So we're going to be conservative. We're going to say 150 ticks. So we say, well, what if I'm going to take 20% of that as a profit target. I'm going to look for 20% of today's range as a profit objective. That means I'm going to have a 30-tick target. So as a example, let's say we took that first micro macro cross and we had a 30-tick target on our trade. It would look like that. Took you a little while, but you did get there, and the market went a little bit further, and then it started to consolidate again. So that's one way that you could use it. Remember, that was a conservative estimate of 20%. The other thing you can do is you can do the inverse. You can say, okay, the market, we're going to say today's range is going to be about 150 ticks based on the information that we have here. What if I want to offer up 10% as a stop loss? Well, you can use your fixed tick scenario here, and you can actually set your ticks to say 15 ticks above the high if we were looking to sell. All right, so that's another way that you can use the Day Ranger. But the Day Ranger was developed by Omar Al-Tuki. He's the fellow who trades the Forex market with the DTS system, and he's very sensitive to what kind of ranges the market is making on a particular day. And is the market expanding or is it contracting? Should I be looking for trends or should I be looking for consolidation? It's a very helpful tool. I have to admit, one that I don't focus on as much as I probably should. So, very good question. Good way to end the session today. If there's any other questions, please let me know. Otherwise, we're going to button up the room, and I will wish you all a happy Thanksgiving weekend. If you are going to hang out and trade, well, you know what? Until we get above the high here, the Raptor shows it to us pretty well. Until we get above this high or below these lows, it's going to be tough slogging. If we break the high, we can probably anticipate a little bit of a rally. But I can tell just from the activity and from the size of the bars and the ranges, the volume has really dried up. You're just going to see buyers and sellers trading contracts without the market really going anywhere. All right, you guys, have yourselves a wonderful weekend. I will see you again Monday morning. Talk to you then. Bye for now.